Hi everyone, let's go through my preferred and alternative Elliott Wave scenarios on Bitcoin, including potential trading setup, starting with my preferred scenario on Bitcoin, where we are looking for a 1, 2, 3, 4, 5 to the downside, followed then by a 3-wave correction to the upside. Now in this scenario, the invalidation is taking the high over here at about 31k, because if this is a 5-wave structure in either a wave A followed by a B or then a wave C, or a wave 1, 2 and then a 3 to the downside for much lower prices, the invalidation simply is taking the high at 31k because price is not allowed to go above that high. So if we then look at this corrective structure and what basically happened over the past couple of days, we then have the low of wave 5 over here, followed by a zigzag structure in this wave A or wave W, then another 3-wave structure to B or X. And in my opinion, this move over here has to be finished, because if this is only the first part of a wave B or X, basically saying that this has to be some sort of 3-wave structure, I think if we're going to take this low over here, we have a very, very high risk of actually moving to the downside, which then means that this corrective structure is already finished. But I have another scenario to show you in a second where this could already be the end, but it is not preferred. It's at the moment alternative. So as it stands now, with this particular scenario, we then have a corrective structure to the upside, followed by a 3-wave move down, finding support at the range point of control over here, the 886, as well as a daily naked point of control that we had over there, as well as the current weekly point of control, all volume levels over here, including then the 886, for then some support, supporting this bounce for then this move to the upside that we are seeing right now. As mentioned, if this has to be a 3-wave structure, basically 2 videos ago, I said, hey, when price was ranging over here, I said, if this wants to be an A, B, C, this wave B or wave X has to retrace really deep in order for the 1-to-1 fib, trend-based fib extension, to be below the high over here. Because this structure over here, either a wave A or a wave W, has a 1-to-1 relationship with a wave C or a wave Y in a corrective structure, meaning that this one went so high, it retraced so much of this move to the downside, that in order for this 1-to-1 to be below the high over here, wave B has to retrace really deep. Because if I show you the fibs, you can see over here, this is where I put it at the lows. But if, for example, price wouldn't have retraced this deep, look what happened at the targets, right? Very quickly. Imagine price would have retraced to this area over here and not further to the downside, then the 1-to-1 is above the high that we made, so above the invalidation, and that's not what you like to see. So in this particular scenario, it's actually very good that price went this deep, for then potentially the target still being in the allowed range, right? It's not invalidated. And also what I really like to see is that the 1-to-1 is right in the target box that is still not hit. This target box is from 30.2k to 30.4k, which is still untouched. And we have a daily, we have a weekly, and also previously the monthly point of control of April was here as well. It just moved because of this wick. It moved to the downside, but it does mean that this is a very important volume level over here where the 1-to-1 target is as well. So this is definitely an interesting area for resistance, where then the potential trading setup is entering in this area. The clear invalidation is the high over here, for then a potential move to the downside in a short. Now, of course, no financial advice. This is educational, purely based on Elliott Waves, but this could be a scenario. If price, however, is going to push on high volume to the upside, this scenario is completely invalidated, right? So this is the first scenario I like to show you, which currently would be my preferred one, where price is going to find a little bit more upside before moving to the downside. However, we also have the more bearish scenario, and actually someone in my Discord group came up with this, Akwandar, I believe, came up with this scenario first, where in the morning I just didn't have the time to look into it. So we have a 5-wave structure to the downside over here, right? This is exactly the same. And this is then a wave 1, so this is by far the most bearish scenario. So we have either then this as an A, B, C, or a 1, 2, and then 3, 4, 5, doesn't really matter. But then the end is over here of this wave 2. So this is a wave 1, and then this is already wave 2 over here. So basically wave 2 is then finito, it's finished. So we can put the green 2 over here. And then this move to the downside is then another first wave in a wave 1. This structure is then a wave 2, for then eventually expecting a bigger move to the downside in a wave 3. Now, if we quickly take a look at fib time from the high of this impulse wave 1 to the low over here, you can see that now the 382 is over here at about Friday the 28th of April at 8 p.m. So, or actually a little bit earlier, 7 p.m. Central East European time. And as you can see, if this is wave 2 is incredibly short compared to wave 1. Usually a wave 2 is at least around the 0.382 Fib time, or that is very rare, as I've spoken in previous videos in the past, the 0.236 is a very, very rare target for a wave 2 in time. So usually at least the wave 2 scenario takes till the 382, and over here this wave 2 finished even before hitting the 236 over here, which is the gray line that you see on the chart. So in my opinion, that is the reason why this scenario is less likely. It's just that this wave 2 over here is incredibly short in time compared to the wave 1 that we had. And also, if we do zoom in to this scenario over here and we look at this move to the downside that we had last night, then how do you count an impulsive structure? Actually, I had this question in the group, which I think is a very good question, honestly, where the question was, isn't this over here a wave 4 and this then an impulse to the downside? And this is what I think about it. So if this is a wave 1, this is a wave 2, this is then an impulsive wave 3. In my opinion, I wanted to then see a wave 4 over here and then another move to the downside. Because as you can see, volume in this move to the downside is very, very high. The highest volume is literally at the lows. And as always, in an Elliott Wave impulse, you want to see a retracement in a wave 4, then a move down in a wave 5, where then the volume between wave 3 and wave 5 is going to be lower. You want lower volume in wave 5. So first of all, that is already odd that the low over here and then potentially a wave 5, if this is somehow a 5-wave structure, the high or the highest volume is at the lows of a wave 5. And also, if this has to be the wave 4 over here, which is one single 5-minute candle, it is very, very short compared to this wave 2. So yes, wave 4 can be shorter than a wave 2. Most commonly, a wave 4 takes more time and retraces longer than a wave 2. That is by far most common. But if wave 2 is a more sideways ranging correction, then in the rule of alternation, one can say that a wave 4 tends to be a zigzag, which is a sharp correction. However, there is still a time relationship. And this one candle compared to the length of this wave 2 is incredibly short. It's much too short actually for a wave 2, so it's even shorter than a 382 Fib time. So we have wave 2, the length of wave 2 compared to this one candle wave 4 it's just very, very short and therefore very unlikely. So for me personally, it looks like to be a 3-wave structure over here, where just this move to the downside is extremely extended for whatever reason, eventually finding support over here, which, I mean, if you do see price falling to the downside, because we didn't really build any structure to the upside, it's quite logical, I suppose, that price is going to find support at the previous range and then the point of control as well. So that makes quite a lot of sense, but I can't really count a very nice clear 5-wave structure in this move to the downside. And that is then another reason why this scenario for me is an alternative scenario and currently not the preferred scenario, where, as mentioned, my more preferred scenario would be to find the highs at least once more, go to this area, then see what price is going to do here for then eventually a move to the downside, where my important target is actually between 24,850 and 24.3k, where in the more bearish target, well, this can also be the high of a wave B and then an A, B, C, but the same reasons for why I don't like a wave 2 is the same as with a potential wave B already in over here. But then of course price has to move down. So the invalidation for this scenario is if price is actually going to take this high, right? And if price is going to take this high, we can still potentially move the wave 2 to the new high. And then we have potentially a wave 1, 2, and then 3, 4, 5 for much lower prices. Or we have an A, B, C, right? That's the question. It's either an A, B, C, or it's then a 1, 2, 3, 4, 5, like an impulsive structure. If we then go to, for me, an invalidated scenario, just to explain to you, then we had a very bullish scenario where this is then the end of a higher time frame wave 4, looking for upside in a wave 5, where the 2022 range highs at 32.4k are very interesting. But in my opinion, this is invalidated because this structure over here is not really countable as a nice impulsive structure. So then this would potentially be a wave 1, 2, 3, 4, 5, right? But this doesn't really let itself count as a nice 5-wave structure. So that's quite a problem. Of course, you can't really completely like make this scenario invalid, but it just becomes very unlikely that we are gonna go for a wave 5 over here, seeing this structure, including again the volume, where the highest volume is literally at the high. We never really got a wave 4, 5 with then lower volume, right? Highest volume at the high. So it's more likely this is a zigzag type of move over here. And therefore, this is still corrective. And if this is still corrective, then downside is going to be the main expectation instead of upside. So I do have a little bit of a scenario which is not finished, where this is then a 3-wave structure, where if this is instead of a 5-wave move, a 1, 2, 3, 4, 5, this is a 3-wave structure. It is allowed to then have a 3-wave structure to the upside that is taking this high, and then a 5-wave move down in an expanding flat, which then is an A, B, C. However, as you can probably see, I counted this over here. I counted this, but I did not count this area. Because this is the big problem. Where is this fitting in the scenario? It doesn't really fit a wave Y in a W, X, and then a Y, because this wave Y has to be a 3-wave structure and then likely an A, B, C over here. Or it's very, very extended in that this is then a W, this is an X, and this is a Y, right? So then this wave Y is very long and goes over here. That is a potential setup. And then this is the beginning of a wave A or W. That we then have maybe this X or B already in, and then we move to the upside in a wave C or a wave Y, where then the target is going to be 32.4K-ish for the 2022 range highs for some liquidity, before then an impulsive move to the downside. So this is definitely something that I at least keep track of, and I like to show it to you for some inspiration, and just to be sure that, hey, if we move to the upside, but we're not dumping to the downside, but instead price might continue to the upside and actually take this high, this scenario might still be a potential scenario. It's definitely not preferred. It's definitely an alternative scenario because of this move to the downside, which looks more like an impulse than a 3-wave structure, but it is something we have to keep in mind. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, I'd like to thank you for watching and subscribing. I will see you at the next one, which will not be tonight at 7 p.m. because of King's Day and family and friends stuff, but tomorrow morning at 7 a.m. Central East European time. Bye-bye.